Thanks for tuning into BQ Prime. I am Muralidhar Swaminathan. I have with me Marc Faber, the author of Gloom, Doom and Boom report. He's very well known in India and he's taken out some time to meet us. Marc, thanks so much for joining us. Welcome to
It's
BQ
my
Prime.
pleasure. Thank you.
Okay, my first question. In your latest report, you've been talking about distractions. This Sunday, that is yesterday, there was a distraction. The OPEC decided to cut the output and crude prices went up. How much of this is a distraction in the current scheme of, we have had too many distractions in the past few weeks. How do you look at OPEC now?
Well, I think if you look at the entire picture in the world, then I have to say that 2019 was probably the peak of economic prosperity for the time being. In other words, we had afterwards the COVID-induced crisis, and then we had a recovery, which is still underway. But say, if you look at tourism in Asia, I just looked at the statistics that were published about Macau, the gambling center, then it's still down 50% from the peak in 2019. It's recovered a lot, but it's still way below the peak. And similarly, if you look at, say, South Korean exports, they've been down now for 5 or 6 months in a row. This is an important indicator of the health of the semiconductor industry and of the demand for technology products. And if I look at the, it's difficult to measure economic growth. People take GDP, but actually what people should look at and focus upon is the standard of living of the typical household. And the standard of living of the typical household in the Western world is going down because the cost increases, in other words, what people call inflation, which is essentially what people spend and the price they pay for it, is rising more rapidly than their incomes. If I look at India as an example, I can say that the standard of living of most people has gone up a lot over the last 10 years, especially after the election of Mr. Modi. Now, I know that Mr. Modi is criticized in some quarters and so forth, but the fact is that he's moved the country ahead in, say, 6 years more than the previous Gandhi administration in 40 years.
All right.
This is the reality, because you have to move to a capitalistic system, to free markets. I'm not saying that markets are entirely free under Modi and so forth, but they're freer than they were before, and they're less socialistic. I mean, when I first went to Mumbai in 1973, they still had rent controls, even until the 1990s. And then the buildings dilapidated because the cost of maintaining the building was far higher than what they could get in terms of rents.
Absolutely. So, Marc, my first question, therefore, when I talked about crude oil, India is progressing, income levels are going up, standard of living is going up, but we do have many challenges. The biggest challenge for us is crude oil. We struck a nice deal with Russia, but I don't think Russia will continue to supply at 65 or 70 when the crude prices are going up to 80 and may even go up to 90. How does this change the dynamics for India and for the world?
Well, of course, this is a factor for India and for all countries. But you say, we have our own problems. Yes, I can tell you, I rather have some of the problems of India than some of the problems I see in other Western countries. Because in India, essentially, the expectations of the lower middle class in terms of standard of living improvements and the improvements that have occurred in India in agriculture are gigantic, whereas in the Western world, young people are disappointed because of affordability issues. You see this money printing of central banks as you know, has lifted asset prices a lot. And a lot of assets like apartments and houses and so forth have become unaffordable for young people with their salaries.
Right.
And so there is a very negative sentiment among young people. And we have statistics published by the Federal Reserve, who always tells us how great things are. But we have statistics that show that today's people with 35 years earn less and have less money than their parents when they were 35, adjusted for inflation.
Right. But then the Fed doesn't want you to spend. They want to, they just make sure that, every, whatever little salary hike that happens is taken away by interest rate hike. They're worried about inflation.
Yes, but they should be worried about inflation because inflation, as has been demonstrated by many economists, not just Milton Friedman, is a tax. It occurs when the government spends more than it receives in terms of tax revenue. So there is a budget deficit, a household deficit, as we call it. And that is the tax you pay through higher prices. And this tax is an unfair tax because it touches the lower middle class and the poor much more than the wealthy.
Right. Okay, so the question now is, every over the last, let's say, 3, 4 months, we've been trying to say that the Federal Reserve will kind of change its language, it'll pause, but that doesn't seem to be happening. You know,
Well, I mean, you say it doesn't seem to be happening. The fact is, we had starting last year quantitative tightening in principle, where they reduced the size of the balance sheet. Compared to the previous increase in the balance sheet, the reduction was very small, but nonetheless, it happened and they increased interest rates. Then the Silicon Valley Bank went bust, and 2 or 3 other regional banks got into trouble, and the bank stock index in America has basically broken down. And right away, the Fed printed again money, but right away. And the money printing in the last 2 weeks was 60% of what the quantitative tightening was before. In other words, the previous quantitative tightening, where they reduced the balance sheet, took maybe 6 months or more, whereas in 2 weeks, they made up 60% of the previous tightening. Look, central banks will all print money. The question is, how much? In India, the money printing has been relatively limited compared to economic growth.
sure, yeah.
That's why the currency has been stable. But every government is tempted sooner or later to get the central banks to print money. Yeah, because governments want to become bigger. The bureaucracy wants to expand. This is the business to expand.
Yeah, so basically central bank, do you think central bank has been successful in destroying demand, if not killing inflation? Killing inflation is going to be tougher and it'll take longer time. But have central banks led by the Federal Reserve been successful in destroying demand?
Well, in some sectors, yes. In the housing sector, which is very interest rate sensitive, demand is down, whereby, as you know, in America, we have a lot of immigration every year, whereby as a percent of the total population is not that great. The population in the US is growing at maybe 0.5% at the present time, whereas in the past it grew at 1 to 2% or 3% per annum. So the population growth is very small. And of all the counties in America, 47% have actually population declines because people are moving away from socialist cities that are not safe or less safe than the cities in Mexico that are controlled by the cartels, and they move to Florida and to Texas, where it's relatively safe. It's not 100% safe, but it's relatively safe.
Right. So,
So in
talking.
some cases, like housing, they've been able to reduce the demand.
Mhm.
And also, if you look at the statistics, and again, I'm always saying India is a different market than the US and may actually decouple, because in the US, in the first quarter of this year, the new issue calendar was very small. I mean, the issues of new shares and
Sure.
bonds
Yeah.
were way down. So that has been curtailed. And when the capital market shrinks, in other words, the new issue calendar, it's not very good for the economy.
Right.
I mean, my sense is that the average household in America and the average household in Europe has cost of living increases. I mean, when you go shopping, the basket of goods you buy is much smaller with the same amount of money. And this is not offset by rising wages that exceed the cost of living increases.
Right.
So we have statistics, real incomes in the US, inflation adjusted incomes, and in Europe are going down. There's no change. The statistics is reliable and actually understates the decline because the government all lie about their inflation rate. The inflation rate tends to be higher than what the statistics show.
Right. But the number of jobs is growing, and corporates are making money still in the US.
Yes, this is correct. But you also have to look at the jobs growing and the population growth, which, as I said, is not growing much. And especially you need to see what wages are being paid and what kind of jobs are growing. You know, if you have lotteries all over the US and casinos all over the US, it's one thing to work in the casinos. The question is, to what extent can a country that only has casinos survive in the long run compared to a country that has industries like agriculture, manufacturing, and services? This is
Right.
the question, you know, what kind of jobs are being created? And again, the statistics are very questionable about whether a part-time job is being created or a full-time job. Part-time jobs don't pay a lot of money.
Yeah. True. That brings me to a very critical question of how vulnerable are the banks in US and in Europe using SVB and Credit Suisse as two examples. I mean, are they? I don't know. Is there still? Are we sitting on some time bomb?
uh, is, the question has to be answered the following way. As you know, some banks have survived for now 4 or 5 generations since the end of the 18th century. And some banks have gone in flames, have been bust. But in general, in an economic recession, it's clear that banks do suffer. And let me present to you the following statistic in the United States. In the US, the regional banks, they have 67% of their loan portfolio is in commercial real estate. Now, commercial real estate is suffering from structural changes in society in the sense that nowadays young people, they don't want to go and work 6 days a week into an office. They want to work maybe 3 times a week in an office and the rest from their homes, or some want to work full time from their homes and so forth. We have nomad workers. These are people, they travel around with a computer and do their jobs a few hours a day and so forth. And so the demand for office space is much lower. Number two, Each time there is a big merger, say, in the case of Switzerland, UBS and Credit Suisse, the office space requirement, and in central district, a very large portion of office space is occupied by the financial service industry. A lot of these jobs will be gone. The jobs that are being created are lawyers, because in America, everybody sues each other.
Yeah.
The waste that comes from lawsuits is unbelievable.
Yeah.
But this comes along with the bureaucracy and with accountants and auditors and ESG regulations and so forth. Everybody's suing everyone.
Right. Yeah. Okay.
Even
So,
ex-presidents.
ex-presidents, of course, you know.
Yes.
Okay. So, the next question is, China is back or trying to come back in a big way. That's going to change many things on the ground. You know, China is talking to Russia. They've allowed Jack Ma to come back. And I guess that's going to change the equation in some fashion. What's your view?
Well, it's coming back, but the growth rates we had in China between, say, 1990 and 2009, the 7 to 8% growth rates per annum is over, finished. The country has begun to shrink its population. The population is no longer growing. And I've seen statistics published or projections published by different universities and institutes. The population of China has the chance to decline from about 1.3 billion people to around 700 million people within 20, 30 years. This is a reality. I can tell you, if you have a shrinking population, you can have rising standards of living because there's less people and the GDP is then distributed among fewer people. But the country will have great difficulties in growing rapidly. That should be clear. And luckily, the world has enough people, basically. I'm not saying we need to reduce the population with all kinds of vaccine experiments, but I'm saying we have enough people in the world for the size of the world. You understand? Some large metropolitan areas like Mumbai and so forth,
Sure.
They reach the limit of productivity.
Yeah.
And there's also a question of safety. You see, in former times, say 200 years ago, a household lives in the countryside. They have maybe a cow and they have some sheep or chicken and a small piece of land, and they are more or less self-sufficient. So when a problem occurs, they can still survive. You're in a city and the refrigeration breaks down, or the internet breaks down, or electricity breaks down, forget it. You're done with.
Right.
This is the problem. The risk, there are books about complex societies, how complex societies, in the end, the Egyptian empire was a complex society. The Mayans were also a complex society. They all eventually broke down because disturbances happened.
True.
Can be climatic.
Yeah, absolutely. In fact, talking about complexities, India is trying to simplify on many fronts, and make life easier. But at the same time, the regulations, especially in the banking area, our regulations are quite stringent and they are sound. So given a choice between, let's say, China and India, will you bet on India or China?
Well, I think the markets are in two different positions. India has been in a bull market and in a consolidation phase for, say, the last 9 months. And China and Hong Kong have been, and other Asian markets have been in severe bear markets. And sentiment in Hong Kong and China became extremely negative at the end of last year. So October, November was the low point because, as you know, the Americans in their ultimate wisdom have embargoed numerous companies. In other words, investors in America are not supposed to own them, these companies. They're banned companies. And so the valuations became very low, and you can buy property stocks in Hong Kong at, say, 50% discount to the value of the assets. So as a value investor, it's very tempting. And I have holdings in Hong Kong and in China, because I still feel that if you look at the whole world, starting, say, around the mid-1970s, there was a shift of economic power first to Japan, South Korea, Taiwan, Hong Kong, Singapore. After 1980, when China began really to open up, but especially after 90, there was a shift more to China. And over the last, say, 15, 20 years, a shift has been also to Vietnam and India. And so the whole world's economy, and you, India, you should be very proud. You overtook Britain as one of the largest economies. Your former masters, the master class from Britain has been overtaken. That is a wonderful event. But basically, the world is changing a lot. And so we have these demographic changes, and we have changes in the weighting of the global economy shifting from the Western world. The Western world was very small, Western Europe and the US, compared to the population of the rest of the world. Now this is going back to, say, the conditions that existed in India and China 1,000 years ago, when China and India were 60% of the world's GDP.
Right.
Approximately. It was difficult to measure GDP in those days. But say if you looked at the population, and the economy was basically agriculture in those days. So India and China were very large economies.
Okay, so do you still hold a portfolio in India?
Not at the present time. I'm not. I'm actually one of the few people that is relatively optimistic about India and about its government. And I'm a believer, because in the Western world, Modi is always attacked about everything. But this is the woke society of the West. They want to destroy people like Modi. They will do everything to bring him down. The institutions like the Soros-related foundations, the NGOs, and so forth. Same for Mr. Xi Jinping and same for Mr. Putin. The West is afraid of the rising power, of the rising economic power of the new countries like India, China, and other Latin American countries.
Right. So that on that optimistic note about India, I would like to conclude this session. Marc, thank you so much for joining us. Hope to catch up with you again when you come up with some fresh insights.
Yes, thank you very much for your time. And I wish your viewers success in their investments and good health, of course.
Yeah, very important. Thank you so much.
Thank you. Goodbye.